And it is Monday, 5/10/2021, first day of the week, and first day the markets are back up and running. So here we are. It's our halftime report, daily show. We go through the markets one step at a time over here on our YouTube channel from Tackle Trading. And welcome out, everybody. If you're a veteran of the community, as you're coming on in here, you know what I'm going to ask you right now. Hashtag Team Tackle right in the chat. Let's start the conversation. Let's keep it lively, fun, and obviously focused on markets like we always do here. Veterans out there, appreciate you guys as always. If you are brand new to our channel, for some reason watching the show for the first time, or you've just not done it yet, make sure that as you're coming in, click subscribe, click the bell, come back and join us on a daily basis. Whenever the markets are open, we go live 12:30 p.m. Eastern time. Got Matt and Mark here today. Let's start with Mark here. Pleasantries from you, sir. How you doing on a Monday?
I've just had a string of Mondays where I don't know, I've been in a good rhythm lately. I've enjoyed Monday. I mean, as a trader, right? You know the rhythm and how excited and how in the zone you feel if you're looking forward to Monday, or if Monday is just another day. And I've been enjoying the market open, getting excited for the markets.
So Monday mornings, you're coming in fired up, getting excited for the markets, readjusting your cash flow portfolio, upping or re-upping naked puts management. But generally, you are enjoying the first start of the week. I like to
Yeah,
hear that, Mark.
it's been a good stretch lately. It's been a good stretch lately. I mean, just happy about it all.
And Matt, let's bring you in here next. Pleasantries from you. How you doing today, sir?
Tim, doing good. Excited to be here on a Monday to break down the market activity.
Let's get down to business. Dow Jones Industrial Average hitting an all-time high. Gold continues its run, but the tech sector is underperforming. There's some I want to unpack here, but as always, let's start on the S&P 500. Little doji to start the week, which kind of reflects today's market action, Matt. You know, we're having strength and weakness in different sectors. The S&P is the best reflection of everything. So here we are, muted response from the S&P. What you read here technically?
Yeah, a little hesitation candle here coming on an early Monday morning. Let's take a look at this from a technical perspective in the broad market very quickly, dropping that down to the 30-minute chart to kind of understand the data over the course of the last, since the futures market opened yesterday. And since the futures market opened, as you can see, it's a doji fest, Tim. We don't got much. We got a little test up, got a little test down. Cash open was relatively strong, but coming right back into the ranges in that, we like to say wide range neutrality. This is short range neutrality. That's what a doji is. Not much I can break down on a doji Monday, technically, but just a little hesitation and not too much to be concerned about specifically in the S&P following that breakout on Friday.
I don't mind Doji Mondays at all. Muted market day coming in. It's a stock pickers market. There's great picks in certain areas of the market. There's others you got to manage. It is what it is. A little tight range on the intraday, not much going on the S&P, but that doesn't tell the whole story of the market here today, though, Matt, because as you go through the different indexes, we do start to see separation. What are you seeing here in the Dow and the NASDAQ and the Russell, and what is that separation telling you?
Yeah, let's take a look at the other indexes very quickly. Looking at the Dow Jones. Now, the Dow Jones is obviously one of those. It's probably 1A right now from an index perspective. Obviously, that's where a lot of those cyclical names really kind of drive. And yes, the S&P is home for a lot of those names as well, no doubt about that. Materials, industrial, finance, healthcare, energy, ton of those types of names in the S&P as well. But the Dow Jones is chock full of cyclical names. Like 100% of the Dow is a cyclical type index. Think about it. The Dow Jones Industrial Index. It is a cyclical index. And so you're obviously going to see a little bit more passion behind the movement in the Dow Jones right now, because it really does fit the theme of the market very, very appropriately right now. And you looked before you had the breakout last Thursday in the Dow. Remember, the Dow was front running that breakout last week in the S&P. It's really kind of leading the charge right now from an index perspective. And so on Thursday, when you broke out here and then saw the follow through on Friday, real good price action as you're seeing this momentum build in the Dow, and you're seeing that very clean. And again, we've said this many, many times on the halftime show, or the halftime report, but the cleanliness of a chart matters. It just does. And when you're looking at the Dow here and you see this tight consolidation where nobody wants to sell, and that's what it's telling you. Nobody wants to sell. You had a reason to sell. Nobody wanted to sell. You had a reason to sell. Nobody wanted to sell. Had 3 reasons to sell. Nobody wanted to sell. Nobody wanted to sell this. That kept that defensive nature of the market, and it lined up that breakout very, very nicely in the Dow. And then you broke, and honestly, the last 3 days on a breakout, that's performing the way it should. You're separating yourself from your averages as you're picking up momentum on the breakout. You had good volume patterns supporting that breakout as well in the Dow Jones. And so when you're looking at the S&P, you're saying, okay, tight range, tight range neutrality here, a little bit more pivot action, but a pretty clean trigger above that 42 handle. Broke out, consolidate today, looking fairly decent in the S&P 500 from a broad market perspective. The Dow Jones a little bit more, I think more of the Dow Jones more from a specific sector, and it really does fit that sector of materials, industrial, finance, that cyclical type area. Obviously starting to pick up the momentum here. You got to be looking at the Dow, and then looking at the Russell 2000. We'll save the NASDAQ till the end. Not much has changed over the course of the last couple months in the Russell 2000. Just a neutral index after a very, very, very quick journey from 15K all the way up to 23K. Think about that. If that was a stock, we'd be like, yeah, this is perfectly fine. Let that fundamentals catch up. And that's what's happening. Look, and if you think of the 200-day moving average as that the fundamentals catching up, well, look at it slowly and methodically catching up over time. And so after earnings, as we're getting to the tail end of earnings here, yeah, the fundamental analysis is catching up, but there's nothing in this chart right now that speaks to me from a, oh man, we got to go out and get some action here. Oh my goodness, we need to really look at those small and mid cap stocks to find the gem in that 2000 stock arena. No, there's a little bit of up in that index. There's a little bit of down in that index. Well, I should say there's a lot up and a lot down in that index. Pretty volatile little index right now. But from an index perspective, not a lot happening here. And again, to me, as long as 2300 stays alive, and today it's 2300 is still alive the same way it was alive here, the same way it was alive here, the same way it was alive here. And so that 2300 breakout is still alive. But why would anybody touch it from a directional perspective, in my opinion, until the index breaks out? And so to me, neutral, going to maintain neutrality on the Russell 2000 until 2300 is actually violated and confirmed. Once that occurs, we could see something really, really good from a Russell 2000 perspective. But until then, let's just be a little patient. Let it do whatever it wants to do over the course of the short term until that breaks out. Now, you do have some support levels that are increasing that you want to just take a little bit of a peek at here. As you can see, that little trend line developing here in the Russell 2000, a little bit of increasing support levels could put some pressure on that $2,300 breakout, and that could happen quickly. So most likely not going to occur this week, but definitely get that potential breakout on your radar, because you do have increasing support as you have a horizontal resistance. And Tim, you do know, like symmetrical triangles, not my bank. Like I am not a fan of symmetrical triangles, because when they break out, just the way my eyes work, my eyes always gravitate to the left of the chart, and they always be like, and I'll micro analyze any intraday resistance levels. And it just, I just don't work well with symmetrical triangles, just the way, again, it's not a problem with the pattern. It's a problem with me identifying the pattern, because I just don't like them. Ascending triangles, though, I really, really like. And so when you see this increasing support levels against a horizontal resistance level, that shows you that the buyers still control, that the buyers still control the price action, even though it is a little bit volatile, even though it is a little bit hectic and crazy. Buyers are still in control until that changes. And so keep an eye on that $2,300 breakout. You got some chop at 2366, obviously, with the broken head and shoulders, but that increasing support levels, horizontal resistance level, typically leads to a breakout, and those breakouts could be fairly legitimate. So keep an eye on the Russell 2000. I know Tyler's looking like at the Russell 2000 like a hawk this week, but again, until 2300 is broken, it's a non-story for me. Looking at the one where lots of conversation is actually transpiring, and that is the NASDAQ. And the NASDAQ is obviously shown shown a little bit of weakness here. We saw it last week with the violation of the 13,700 level. You saw that violate, and obviously when we were talking about it all last week in the actual sector itself, XLK, closing underneath that 140, violating that pivot. Again, this is more neutrality instead of consolidation, and it's only a minor difference, but there is a difference there. And when you violated that 140, we downgraded the technology space last week. And then obviously we didn't upgrade it, even though it found its footing here, even though it found its 50-day moving average, even though it went upward moving in price. Guess what we did at Tackle Trading, guys? We didn't chase that dragon and dreams of glory in the NASDAQ, because that's not where the action is. We actually downgraded the NASDAQ yet again into that 25 territory, a 5-point downgrade, given the fact that, you know what, you're technical weak here. You just are. I don't care what's said out there. You're technically weak right now, and you violated support, and you snapped back and came right into that resistance channel, which means it's not surprising, given the fact that 140 was so important, that we dinged up there on Friday and got smacked right back down. Little bit of weakness in the NASDAQ right now from a technical perspective, still into the bullish territory, given the fact that your long range, you're still above these levels over here. But a violation of 50-day moving average would most likely put the NASDAQ back down into neutrality, which would be a fairly big downgrade. So right now, we're just looking at short-term weakness. We've downgraded the NASDAQ twice over the last 2 weeks. If we violate a third level of support, 135-ish, if you violate that, you're probably back down to neutrality, and the NASDAQ could take some time, circa Russell 2000, before it lines back up again. Very important test this week in the NASDAQ, no doubt about that. So when you're looking at the indexes, you're saying, okay, I'm good in the S&P. Like that breakout, you're staying above 4,200. Moving averages is going to work for you. Fantastic. Who's worried about the Dow? Nobody. Literally nobody. Said nobody around the world today. Not one person said I'm worried about the Dow today. NASDAQ, obviously we have some concern. Keep an eye on that 50-day moving average. If you violate that 50-day moving average, you're obviously looking at a third leg down, and you could be testing some very important support levels down here as we inch down to that 200-day moving average. I'm not saying it's going to happen. I'm just saying that's in the cards this week in the NASDAQ, so we need to keep an eye on these very important support levels this week, specifically that 50-day moving average right there, the little blue line on that chart, Tim. Keep an eye on that blue line. Violation there, you're probably looking at more depressed price action as we come into 13,000 to see what it's going to do at that point. And then the Russell 2000, obviously we have the increasing in support, horizontal resistance, and it's a little bit of wait and see to see if we can break that.
Love the breakdown there. Obviously, as we're going through the indexes, it does tell us a lot. When we see the S&P on a doji, the Dow hitting new highs and looking just beautiful, and then the NASDAQ stuck in compression, actually now down testing support again. There were a couple of major NASDAQ names, by the way, that got downgrades today. Citigroup downgraded, I believe, both Google and Facebook to neutral from buy. There was a little headline chatter on that, but this is more of a rotation that we've been seeing for a while from these aggressive areas into the cyclicals. Yeah, go ahead.
That's a tough downgrade on Facebook today.
Yeah, it was looking good too.
Like, Facebook's not my thing, not a fan of the company, but that's a good technical pattern coming into a downgrade. That's a tough downgrade today.
Yeah, it blew that pattern up.
A lot of traders are complaining about Citi today.
Yeah, come on, Citigroup.
Not the investors. The investors, like, who cares? The traders are looking at that as a bullish retracement following a gap fill off of a positive earnings announcement. And Citi's like, no, we're going to destroy your technical pattern. No, every trader's out there like, I hate you, Citi.
Yeah. Even Intel caught a downgrade as well, by the way.
Well, so yeah, who cares? It's Intel.
Yeah. It's not Facebook and Google.
It's not Facebook and a beautiful, but like bullish retracement gap fill pattern. Like, who cares? It's Intel.
That's right. That's right.
That's Intel. Who cares? Like, yeah, you chase the downgrade. Everybody's downgrading. Yeah. Why do you have to front run the downgrade here, City? Like, why did you have to start this? That's all I'm saying.
Blew my pattern up. I had him on
Listen,
my watch
it's
list
not
coming
my
into the week.
pattern. I don't trade Facebook,
I was
but
interested in this one.
I know a lot of people who do, and they love this pattern. It's a great pattern. It's a beautiful pattern. And City decided to downgrade a beautiful pattern. Okay, City.
Yeah, sure did. Marky, what's your read on market action here today? Before we go into sectors, Matt just thoroughly went through all the different indexes, give us a good view of what's happening technically and what's going on with sentiment. What's your read on the markets right now?
It's why I watch Matt's technical analysis, even if I'm not here on the show. There's a couple segments that in a busy week, even if I'm not doing the show with you guys, that I'll watch. Technical analysis is so amazing. And it's so fun to speculate on the big themes in the market and what's driving price action. And a lot of it is guesswork. No, there's some guesswork is better than others, right? And there's sometimes that you get a clear thing. And we could speculate why the NASDAQ is weak. Is it rotation? Is it inflationary worries? Is it people front running potential rise in rates? And that can be a very fruitful exercise. But what I really enjoy is that technical analysis will tell you where sentiment is, and technical analysis has a really good track record of giving you information. And if it's weak, it's weak, right? And the chart will tell you. And so, yeah, no, it was a good breakdown from Matt. And I use that in my own decision making. Tech's weak right now. It's just that simple.
Well, the XOK, I would still say obviously we're in the generally bullishness, but we did downgrade the sector to reflect the weakness. Obviously, coming in here today showing more weakness. Yeah.
There's some short-term weakness in the NASDAQ right now, both from a technical perspective leading into this violation of support. There's a little bit of weakness in comparison to the other sectors. The violation of support, like there's things technically that I'm like, okay, I can understand. A violation of support, like you can't debate that.
You can't debate that.
Like you cannot get to the point in your career where you're like, let's have a conversation over why support was violated. No, support was violated, period, end of sentence. You got to deal with it.
Deal with it and move on. Adjust your ratings, adjust your management. And,
there's no conversation for me when support is violated. Resistance violations, yeah, we'll have a conversation. Support gets violated,
gotta have a downgrade.
Support's the end all be all of. It's the holy grail of technical analysis.
It's why as a perma bull, I love support and I love betting on support, but I also love support, and I say this all the time. I love support because if support's violated, it gives you really, really good information, right? So
it tells you a ton about everything.
It tells you a ton about everything, and it tells you that, hey, you can have an opinion and you can love that company or you can love that area, but buyers had a chance to come in. And
Mark, I always tell when I talk to new traders out there, new investors, and they're like, well, how do I find a stock to trade, to invest in? I'm like, I always do the whole value investing thing, right? You think about companies think about companies you spend money on, think about companies you think have a positive impact on your worldview and stuff like that, right? And then somebody will always bring up a company, and I'll be like, well, just because you like them doesn't mean anybody else does. And that's what the violation of support tells you. Just because you like something, it tells you every other trader and every other investor, if it violated support, they didn't like it. You need to adjust, not them.
You need to be very careful on support breaks.
Yeah. So.
Absolutely.
Well, it's like, honestly, Tim, coming back very quickly, I know you wanted to transition here, but I just want to come back to that conversation we were having last week. When you saw this 140 level here, right? This 140 level here from last Friday, this candle right there. I found the candle. It's right here. This candle. Right here we started talking about it, right? Right there we started talking about it. Here's Friday. Right there. Okay, I got there. Right there. Me and Frank were sitting here in the scanner report meeting before the market was closed last Friday, not a week ago, last Friday. And literally we're staring at 140. We're staring at 140. And the last sector we're talking about is technology. And both Frank and I said, okay, if it closes under 140, we're downgrading because 140 is support. And it closed literally it was right like 139.80. And I'm like, yeah, it's a downgrade. We're only talking a couple pennies on an index, but that's the importance of support.
Yeah. Yeah. And I remember that conversation, listening to it. In fact, we were even kind of having some fun with it. Are we going to close below 140, above 140? It ended up
I
closing below
lost that bet.
support, and it was significant. And over the last 10 days, because that was about 10 days ago, we've just seen technology continue to underperform because support breaks do matter. No question about it. Very, very good point on that. One thing, while we are on tech and XLK specifically, I know that we want to run through the sectors on Mondays as well. Do you want to do that right now, Matt, or do you want to go through
Yeah,
commodities first?
let me take a quick peek at the sectors here. And I'll do a little bit of a rapid fire on the sectors. Let's talk about the areas of the market that have really kind of been theme based right now, and in those. And I hate to even use the word theme based because that just reminds me of 2020. And that is just not that's not what has been transpiring in 2021. But let's talk about the sectors that really fit what's happening in the market right now. And that's materials, finance, industrials, a little bit of healthcare, and obviously energy kicker when it wants to wake up and perform like that. But our number one rated sector at Tackle Trading in our newsletter is the basic materials space. It has been for quite some time now. And we've joked about it, but I mean, the reality is that the analysis supports materials being as one of the, if not the highest rated sector at most companies, in my opinion. And so if they're not doing it, they're doing a disservice to their clientele, and they're doing a disservice to what is happening in the market right now. Materials is absolutely on fire in so many different ways. Yes, we're a little bit range up, a little bit overextended right now in the short term. You're seeing a excuse me, you're seeing a relative strength indicator that is currently at 79. You see how overextended this is in the short term. It did get reset with this high base breakout as you saw that come back down, but now you're very overextended. But it doesn't matter. We did upgrade 5 because of the strength in this area of the market. It is our highest rated sector right now at Tackle Trading, right there at the 5 handle. We never put sectors and indexes into the positive 3 territory at Tackle Trading. It goes from touchdown to touchdown. 5-point rating is about as high as we get at Tackle Trading, quite frankly. And it really does fit with what's going on in the material space. I got a lot of confidence in the material space. I know you guys have a lot of confidence in the material space. Mark, Commodity Corner's been on fire, and I anticipate Commodity Corner continuing to be on fire over the course of the foreseeable future. There's not a lot of weakness here to really kind of look at and be like, well, this is just going to come back down. It doesn't fit with what we're seeing fundamentally. But that's not what I'm seeing. I'm seeing strength on strength, and I'm seeing the areas of the market that were weak, i.e. the gold market, right? Gold, silver, and platinum and palladium, some of those mining companies out there didn't really support the index as the index was traveling higher. But now what do you got on gold? You got GDX here, the miners doing really, really well, putting a lot of additional price appreciation on that area of the market that it was already hot as get out in the chemical space. So when you're looking at materials, 5-point upgrade. And typically speaking, when you're a little bit over extend like this, we like to be a little cautious with the rankings. That's how hot basic materials is right now, and that's how much we think it's going to continue in terms of we had the confidence to do that 5-point upgrade. And so materials is our highest rated sector right there, the 5. Now, not far behind it though, and definitely check out the newsletter for extended conversations on all these, is the financial space and the industrial space. 1A is materials right now, but right under that, 1B is right there with finance and the industrials. Finance, it took off earnings season, quite frankly. This is earnings season for finance. Once finance was behind us, finance ran. There's nothing in this chart that signals any weakness other than overextended. And so you really haven't had a resetting of this trend or this pattern yet. I don't consider that a reset. It's only a simple consolidation, a little hesitation high base, which simply extends this previous price movement. And so I don't see this as a high base that resets the pattern for me, which means this is your box in terms of your current momentum. Well, that box in terms of your current momentum is fairly substantial in comparison to some of these other movements in price. And so when you look at that current movement, you come back and you compare it against that, from that lower low to that lower high, you see the momentum, and then you come back to this and you see a very similar scenario where it did start getting a little overextended before you got a couple volatile days where it came back down to that 9 EMA. And so you certainly could see a little bit of increasing volatility as we get to the top end of the charts in finance. You could probably say the same in materials as well, but that's just a hypothetical until we see it. Right now, you're range up. You're probably a little bit further than range up. You're overextended. Maybe we see a little consolidation, but as of today, early on a Monday, it just looks like this current movement, this current momentum does in fact want to continue. No upgrade here for finance, and the reason we did not upgrade despite a very similar week in finance as we did materials, once again, I just feel like materials is the flavor of the month right now.
Mm-hmm.
It fits so much with what we're having from a national conversation: economy reopening, inflation, whatever you want to talk about, you got to talk about materials in that. You don't need to talk about technology. You don't need to talk about communications. You don't need to talk about some of these other sectors, but you do need to talk about, materials and finance and industrials and so on and so forth. But again, the reading on finance that I have is just slightly overextended. I do expect a little bit of consolidation at the top end of these charts, circa what we saw back here as we got overextended. And as you saw that, once you got overextended, it's not like you substantially dropped in price. You just had a volatile trading range until you lined up a new resistance threshold. And so no upgrade here, just a continuation of the previous price movement. And so, but do expect as we get a little overextended, maybe we see a little consolidation here towards the top end of the chart. So I don't think it's wise to be chasing price here in those areas that were very, very hot. Maybe be a little patient, let them consolidate a little bit, and then line up a little bit better of a technical chart here. Industrials just fade, hug that 9 EMA, and then blow that out, and let's run here. Looking at industrials, I got no additional read on industrials other than what's been transpiring over the last 3 months. Very healthy sector, very consistent sector. The only thing I would say here that is a little surprising, I don't think it's a bad thing, from a technical perspective, just a little bit of a shifting character, I would say, is over the last couple days, you see this methodical grind here, right? You see this methodical grind here. But every time it tried to get outside of its personality, let me get off that thumb and let me get to that. Every time you tried to get outside your personality and run momentum, all it did was shift the volatility. Run momentum, all it did was shift the volatility. Run momentum, all it did was shift the volatility. So when you're looking at this, and again, I don't know if it's positive yet or not, you are seeing a little bit of shifting volatility character that you saw similar as you got overextended here, as you got overextended here, and as you got overextended here. Look at that trend. That's a methodical grind here. Every time it does shift to momentum, it doesn't really work out that well. And so just keep an eye on that. That's all I'm saying. You got to like the momentum. Don't get me wrong. I like the momentum. I'm not trying to throw cold water on the momentum. I do think the momentum is a good thing. But again, just every time we've kind of shifted that momentum, we shifted the volatility, or we shifted momentum, we also shifted the volatility skew, which made it a little bit more of a choppy environment than that slow methodical grind. So just keep an eye on that in the industrial sector, but I'm not concerned about it. I'm just pointing it out that it has happened as we get to a little bit more top end of the chart mechanics. And given the fact that finance is overextended, given the fact that materials is overextended, given the shifting of the sectors a little bit, I wouldn't be surprised to see a little volatility come back to this area of the market. Just a little bit, just a little, like a pinch of salt, Tim. That's it. Just a pinch of salt, just a pinch of volatility.
Just to taste, right? Let's
Just to
season it to
taste.
taste.
Just
That's
to
right.
taste. It's not like just a pinch. Anybody who knows how to cook knows what a pinch is. Just a pinch.
That's
Just
right.
a pinch of volatility. But let's take a quick peek at the other two sectors that are more cyclical, and that would be your healthcare. Very good price action on Friday here. The sector, a little bullish retracement, confirmed the bullish retracement, fight back up against the resistance channel, break out of the resistance channel, and continue. I don't have much to say on the healthcare space. It's performing it's performing the way it should perform based on a bullish retracement. So if you have this as a momentum trend, which I do, momentum here, and the reason, very simply, I always judge momentum from a technical perspective. Look at your momentum there. Look at your momentum there. Is that a bigger box, Tim?
That's a twice bigger box, actually.
I don't even care what it is. Is it bigger?
It's bigger, yeah.
Are we certain it's bigger?
Yeah, I'm 100% certain.
Okay, then it's
my old eyes don't deceive me on that size. No.
Good. Then it's momentum. So if you have this as a increasing momentum trend and a bullish retracement pattern, then everything that transpired is what should have transpired. You should see a fairly volatile shift back up into resistance, and once it violates resistance, it should make that chart a lot more clean, and it is. You got to like the healthcare space right now. Didn't upgrade it because, again, what are you going to upgrade here? All you have is the continuation of everything that should have transpired. And so with the bullish retracement confirming and the breakout confirming, that simply confirms what the previous price movement had, which means you have confidence, but it doesn't mean we're going to upgrade to make sure your confidence is there. It should be there based on the trend and based on the pattern. And so no upgrade here in the healthcare space, because the analysis is simply a continuation of the current momentum and not an increase in the current momentum. So we kept that at that 15 because momentum is already there in the space and not going to upgrade just because the same thing is transpiring. And so healthcare right there at a 15 handle. And then the last cyclical area of the market that I want to talk about from a sector perspective would be the energy space. And you know, we're through earnings for the most part, Tim. I mean, when you're looking at earnings, we have 88% of companies reporting earnings so far. We got a few laggards, right, like the Marriott today and the Disney tomorrow and whatnot, but we're pretty much done through earnings. And Mark, I know you love the energy space, correct? You just love the energy space.
I mean, not all the time, but lately,
But in earnings, we typically don't talk about energy beats the same way we talk about financial beats and technology beats, right? Well, guys, the third best performing sector from an earnings perspective, from an EPS beat perspective, is the energy space. It starts with financials. Financials had a 94% beat rate. 94%, guys. Once again, we can throw cold water and say, yeah, but Matt, that bar was really low. I would say you're wrong on that, though. Tim, what was my expectation coming into this earnings?
Well, you knew that we were going to have one of the most amazing quarters we've had from an EPS beat perspective. You were hesitant about price responses, but you were looking for price beats on EPS.
I'm less hesitant about price response post earnings, by the way. But before earnings, yes, I was a little concerned. We were very elevated coming into earnings season. I don't think we're very elevated post earnings. Now, from an energy perspective, and again, we talked about this last week as well, but you're now through that Exxon, Conoco, you're through the European counterparts, you're through all of that. And broadly speaking, guys, 91% of energy companies beat the expectation. Once again, 91% of energy companies, boring, old-fashioned, energy companies, 91% of them beat that expectation. They also have, and I want to give you a couple numbers here. In the energy space, before earnings season began, okay, we were expecting EPS growth to be a negative 10% in the energy space. These beats have been so impressive in the energy space that we are now expecting for the end of the year 20% increasing EPS for the energy space. And so not only did 91% of the companies beat the expectation, but they beat it by such an aggressive response that now it shifted the entire metrics of the sector from a negative to now a positive growth. And no, the growth for the energy space doesn't rival what we're seeing in say the entire market, because right now we're talking a blended growth of 49.4%. And for those of you who don't know what blended growth is simply what companies have reported and what companies have not reported, but what we expect them to report. Does that make sense?
Mm-hmm.
So for example, if we have 98% of S&P energy components reported, blended growth is 98% of the companies that have reported, and then the hypothetical 2% that we do not know what their actual numbers are, but we know what their expectations are, right?
So okay.
Does that make
Yeah,
sense?
so they're folding everything in, even with the last few percentage companies who haven't reported. So they're
Yes.
giving a projection. Okay.
Yes. And when
Mhm.
you're looking at the broad market right now, that's at 49.4%, guys.
Mhm.
Like, and that's the highest mark in the last, I'd say, 11 years, since like 2010, since we were coming out of the subprime market meltdown. So that's obviously a very, very robust number. But guys, that's doubled in the last 3 weeks. That's doubled in the last 3 weeks. I give these numbers every week, and sometimes there's a lot of numbers, so sometimes they just get mixed up. But we were expecting blended growth in the 20% from an S&P perspective. We're coming in at 49%. We were expecting a negative 10% in the energy space. We're now coming in at 20% on blended EPS growth. It's very impressive to see what these raw numbers have done. And then when you look at revenue, now obviously revenue is never going to be like EPS, right? EPS, they always beat EPS. Like right now, Tim, 88% of companies are reported in the S&P. 86% of them have beat S&P estimates on an EPS perspective.
When the number's always high, but 86 is higher than normal, right?
Well,
I mean,
74 is the 5-year
yeah, I
average,
was gonna
right?
say.
74 is the
So,
5-year average, so 86, and it was like 88 last week. And I said,
mhm.
the names we're going to contract a little bit, and the names we're going to get this week, we're going to contract a little bit more. But I'm willing to bet we're finishing at 85, 84% at this point. And if we do finish at 86% in terms of beats, that will be the best quarter that the S&P has ever had from an EPS
EPS beat.
beat. Again, the S&P has made more money before, not a lot more money, but it has made more money before. It's just the beat versus the expectation that has been very impressive. Now, from from a revenue perspective, specifically in the energy space, 74% of companies are beating revenue from an S&P. Only 64% are beating them from a revenue. But Mark, you know this space. To see what energy companies were reporting even 3 months ago, to now come back and say we're making money, to now see that BP and Dutch are rewarding the investor class, to see Conoco rewarding the investor class, to see Exxon and Chevron, or not Conoco, but Chevron reward the investor class, to see Conoco and Exxon talk about that. I mean, it's been very impressive to see these numbers come back in the time frame they have. And what's your take on that now that we're through earnings for the most part?
Well, I'm going to talk about this a little bit more in the commodity corner coming up. And 2 weeks ago here on this Monday on the commodity corner, I talked about why I was still a believer in energy stocks. And and then we had this very important earnings season coming up where we'd get data to see if it justified the belief. It's amazing. I mean, from a cash flow perspective, which is how I primarily approach energy, I haven't been this confident in cash flow strategies in a long, maybe like 6 years. Not been this confident in cash flow strategies. If energy were to tank, I'm a huge, massive buyer. I'm a buyer right now. Like
At the
and so
elevated price.
yeah, at the elevated price, I'm a buyer right now because and I'll talk about this more in a minute about how I approach it and this and that. But I thought earnings supplied everything you could have possibly wanted if you had a bullish thesis and confidence that it's just going to be a good stretch. And I think there are scenarios where energy goes parabolic, and I'll talk about that here in a second. But from a cash flow perspective, this earnings season was perfect.
Yeah, it really was. And like I said, I do think it gave people more confidence. And Mark, what I heard you as a cash flow expert saying your confidence in cash flow strategies, I think that should tell the Delta dogs out there everything they need to know about what
Sure.
kind of the momentum that is building in this space. Now, the ranking itself.
That's the key phrase, Matt. It's building, because it sometimes feels, because at Tackle Trading, we've been all over energy for 5 months now, basically since Pfizer vaccine, and that kind of signaled a lot of things. And so it feels like we've been, building this
we were in
momentum
front of Pfizer. Just again, Pfizer happened a week after we called it. I just want to be clear on that.
But there really isn't. I mean, energy is a sector that's very poo-pooed by most traders. I mean, most traders and most investors are like criminally underweight energy. So when you talk about momentum building, it really is. It hasn't even got going yet. I mean, it feels like at Tackle Trading, we've been beating the drum for a long time, but in the broad investor class everywhere, it's just starting out right now.
Mark, the broad investor class is literally just recovering pandemic price. That we're still in recovery mode from pandemic in the energy space. And I always say this, but if the analysis is legit, it's going to be legit for the next 3 to 6 months and not for the next 3 to 6 days.
Yes.
And so post earnings, now that we now understand kind of what's happening from a fundamental perspective, I do think it's going to open up the risk graph a little bit for a lot of traders out there, now knowing what we now know regarding these numbers coming out and the confidence building. I know for me it does, and I know for other traders it does as well. Now for the ranking itself, in its fight back to being a relevant sector, no doubt, we did upgrade 5, right? We did upgrade 5. And the reason it comes in at the 30 handle. It is one of our currently one of our lowest rated sectors. But again, how we rate things, guys, like we're building into that. The same way we're talking a lot about energy today, even though base materials is our number 1 sector. Well, the difference is you're building into something here. And so we do have a 5-point upgrade. The reason it's not a little bit more aggressive than that following earnings is you're just overextended coming into a very important resistance level. And that's really the only hesitation here on something a little bit more aggressive from a ranking perspective, is you're elevated coming into a horizontal resistance level. And when you look at that from the run energy has had, and yes, in recent history, energy can absolutely run. There's no doubt energy can run. But when you've ran from 46.5 to a breakout channel at 54, and you're talking about good old-fashioned boring energy, not a lot of times can you see that momentum continue on top of that. So what are we anticipating here, guys? And sincere question: are we anticipating that? Like, is that the proper anticipation, Tim?
That's an interesting question, because I currently have,
Because
3 or 4
that
different.
would be what it did the first time, and I just don't see that transpiring.
Yeah.
Like, that's a historical movement for energy. Anyways, go ahead.
I'm not covered on my energy stocks yet. So I'll tell you, I haven't like capped them and said the run's over. I understand that we are range up, no doubt about it. I'm a delta trader in that regard, though. On the momentum, I'm continuing to hold. I will cover them when I feel like this little short-term move is over, though. But I am expecting further upward, price appreciation personally. I know that we're stretched in the short term. We've run from 46.5 to 55.5, like you're talking about, and we're hesitating here today. But that also just did break out of a pivot, Matt. So for me, I'm still looking for upward mobility, understanding the risk in the short term. Mark, what about you?
We're doing the whole commodity corner right now, right? Oil hasn't broken out yet, and oil is in the upper level of its current range, near resistance. And that's one of the big questions that I have when deciding upon what to do with a commodity, because I'm a greedy trader. I want to have it all. And what I love is that when you have breakouts in the commodity and you have breakouts in the associated stocks that go with that commodity. And so, and whenever the commodity itself is near resistance or hesitating near resistance, then I'm like, I mean, I respect resistance, just like I respect support. I'm going to respect resistance, and you have a pretty clear resistance level. You set those short-term highs back in February, came up to a pretty clear test last week, and got slapped down. That lets me know that traders are very well aware of that resistance level, and it was following a nice 2-3 week run, right? So it was coming in, that was normal, right? So nothing to get panicked about. Short-term moving averages are still holding. But whenever I am at resistance and close to resistance and already got some negative price action at resistance in the short term, I'm hesitant in the short term because I want it all. And I still think energy can run even if crude oil does nothing. Energy doesn't need, and Matt's made this point several times, energy stocks do not need crude oil to go to 70 to take another leg up. But when crude oil, excuse me, but when crude oil itself is right there at resistance, it's like I don't want to enter any new trades. I start thinking about covering, especially if short-term moving averages give out. That hasn't happened yet. That hasn't happened yet.
Well, and Mark,
Matt, your mic
doesn't hurt. Stocks have 70, right? Yeah.
Try that again there, Matt. I think we might have got you back. 1, 2, 3, 1, 2, 3. So Mark, continue your thinking. Obviously, we'll talk about this in the commodity corner here in just a minute. But once you've made a big run, as long as short-term moving averages don't give up, you're not going to cover them yet, but you're considering covering your energy stocks at this point.
Well, yeah,
where your head's at?
Yeah, I mean, just because, it's a battle of technical. It's a pinch type formation, and a pinch type formation is when you have one level of support, which in this case are rising moving averages, right? They act as support. We see it all the time. But you're coming in against a level of resistance. This case, horizontal clear resistance. Something's got to give, right? Eventually, something eventually has to give. Now, sometimes the moving averages will hold, you'll get a catalyst, and you get that breakout. It happens all the time. And sometimes the resistance level is just too strong, and it gives out, and you come back into the range. And it's not necessarily bearish, but it's very normal. And so you have a very normal technical condition on crude oil. And crude oil is a massively traded instrument, right? I mean, so this is not like some small company. This is a massive, 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 massive market. And so, waiting for those market forces to play out at a key technical level, if you get a breakout in crude, I'm going to increase exposure in energy stocks. And I have lots of exposure already, but I'm going to increase it even more. And I'm just waiting for this little technical formation to play out in the short term before I make any more additional decisions on when to sell calls or add additional exposures.
And Mark, to kind of go on what you were talking about here, the consistency of the technical movement in crude oil in comparison to what we were talking about in energy, you look at this upward movement in energy and it's parabolic, right? It reminds you of what was transpiring here, it reminds you of the vertical movements you were seeing here. It's parabolic. And obviously, understandably so, given the fact that we're now post earnings, market response has been very, very good. This was an area of the market that was showing weakness before earnings season. The rest of the market wasn't showing weakness before earnings season. It was showing consolidation or upward movements in price. And so this was the one area of the market that did have some weakness coming into earnings. And so you do have a price response post earnings that is a little bit more aggressive than, say, some of the other areas of the market. But when you're looking at crude, two things. Number one, crude doesn't need to go to $70 to have energy stocks go up, but it certainly doesn't hurt it. item,
No.
right?
What?
And you do. And I just want to make a quick point on crude oil very quickly. When you're looking at this consistency, again, coming back to the energy chart, energy went from here straight up to the breakout. Like literally, Elon put it on a rocket ship, sent it to the moon. He wasn't as successful with Dogecoin.
I was gonna say,
Right.
did he send some Dogecoin with
He
it
did.
as well?
He was not as successful. We'll save that conversation for the podcast. But when looking at this, you had energy just skyrocket here. You got a really good consistent trend in crude right now. You got a real, and again, talk about consistency. 20-day moving average bounces, gets into the zone. You see consistency here. You see a market perform the way it should perform. Right here, Tim, is where I made the argument that we should be upgrading and front running crude oil, right? It's because of that increasing support. Now you're looking at a horizontal resistance and some consolidation. Well, guys, this here, right here, just have energy do it. That's all you need.
Yeah.
That's what I'm looking for in the energy space this week. I want to see the market defend this price. I don't need to see the market go perpendicular and skyrocket. Defend this price. Play defense. You just broke out some key points of 54. Show you can maintain. Show you can maintain up there. It's very important after this type of movement on that breakout to show you can maintain and play defense. I'm never going to chase a breakout after an overextended run. That's just not me. It's not Coach Frank. It's just never going to happen. It's just never going to happen. This is an overextended breakout. For me, it needs to play defense. It needs to show it can handle the higher price for me.
Love the analysis.
And if it can,
let's go.
No, I mean, if you got a consolidation pattern here on both oil and energy, take a little time off and then take a leg up on both.
And just to be very clear, I'm talking trading, right? Investing, we upgraded 5. It looks good.
We sure did. Yeah, we upgraded 5 on energy, and we even upgraded crude light, I believe, into bullishness at 35. Yeah. Marky, anything you want to add? XLE, we're done on this one?
We're done on this one for now.
Very good. Matt, I love the sector roundup each and every week. Obviously, gets people prepared for the week. Any other sectors you wanted to hint at? Are you good here? You bet.
No, I'm good.
Okay.
Let me quickly, I'm not going to touch base on too much on real estate, utilities, or staples. Just want to take a quick peek at them. Staples did break out. We are maintaining our ranking right there at 20. Obviously, with the upward movement you had today in Staples, we would have upgraded, but it had a little bit of defensive nature on Friday on that breakout. We saw it as a little bit of a defensive, so we didn't want to upgrade. Again, today's price action, you see that just powerful movement back up. That would have got an upgrade in my opinion. But again, Friday versus Monday, we don't have the crystal ball. Staples looks hot right here. Should see some continuation. Staples confidence is obviously, building in the Staples area of the market. Real estate and utilities, they should always be pegged within 5 points of one another. And right now, real estate and utilities coming in right there. Downgrade of 5 points in real estate, just more to really respect this consolidation and that downward movement in price. We are at a 25 ranking on real estate, though fairly bullish for the real estate environment. Utilities, nobody's ever going to put technology analysis into utilities. We're never going to put it at the 5 ranking. Right now, utilities at a 30 handle. Lot of volatility shifts here, though.
If utilities ever at a 5, some really weird things happened in the world.
Oh yeah, like
like some
nuclear
really weird
holocaust
stuff.
and nuclear winter, and yes, aliens arrived. We're not worried about technology because we're worried about heating our homes.
Wait.
Hyperinflation. Oh yeah, some of those really weird things. Thanks, Fed.
Oh, that stuff can't happen.
Wait. I heard from Evans today. He's not worried about inflation. Don't bring that up. So we don't
What?
have inflation problems.
Oh,
Chicago Fed President Evans says that he's fine with inflation running above 2.5% for quite some
Is he
time.
now?
Yep.
It's Charles Evans. Charles Evans is fine with inflation. Charles Evans, you
Uh-huh.
don't even buy your own damn groceries. Shut your mouth.
you
Okay?
know the Fed is worried about something when they schedule 4,000 speeches in a
Yeah,
week, which they did
and
this week.
we're not worried about inflation, but let me make sure that all voting members of the Fed have multiple different speeches on inflation this week, but we're not concerned about inflation.
Yeah,
I just want to remind Charles Evans of one thing. Charles Evans, you had a statement on the late great Paul Volcker one time, and you said he was a hero. You called Charles Evans. This is Charles Evans. Charles Evans, Chicago Bank President Charles Evans. He called Paul Volcker an American hero. Why? Because in the face of volatile and nasty inflation in the late 70s and early 80s, Paul Volcker, he said this: "You're a tremendous hero to the American people and the American public, because he took tough actions and he helped break the back of double-digit inflation at a time when it had to be done." Charles Evans, this is your moment to act, but you're not a hero. You don't act in the face of difficulty. You say nothing's here. You say, no, we don't need to worry about it. You, in the face of this inflationary conversation, you're sitting on your hands doing absolutely nothing. If Paul Volcker is a hero for acting in the face of crisis, what is the opposite of a hero acting in the face of crisis? It's what I've called you for years, Charles Evans. You're the coward, Charles Evans, because you refuse to act. Is that the Charles Evans we're talking about today, Tim?
It's exactly who we're talking about.
Okay, I
no,
just
it's
wanted
a
to make
different.
sure.
It's a different Charles Evans.
If it's a different Charles Evans, I apologize for my soapbox.
Who was playing Charles Evans in the making of the Fed movie that you wrote?
He
the blog
doesn't
about
even
years
get
ago?
a role.
no,
he
no,
doesn't
it
even get a
is.
role?
It is.
He's
I
the
know.
lackey.
I know.
Ooh.
I got to. It's Leslie, the late great Leslie Nelson from like the Loaded Gun series, where he's like, nothing to see here. You know, nothing
Okay.
to see here.
But Mark, here's the problem. There's 7 members of the Fed that the late great Leslie Nelson could have played. I can only pick one.
And he could have played them all. I loved
Yeah.
that guy. I thought he was a great comedic timing guy.
Leslie Nelson, I was going to have him play Fisher.
That's a good one too. By the way, Evans speaking today is the first of 9 Fed speeches this week, guys. Like you guys hinted at, they are rolling them out this week for some coordinated effort. It seems like, no doubt about it.
There's not much. You just gotta love when every time the Fed schedules 15 speeches, and they're like, there's no inflation, but every topic's on inflation. Like
yes.
Like, come on, guys.
Jonathan, we're not going there today. Matt, Charles Evans versus Jay Powell is the biggest coward. Okay.
Oh, no. Jay Powell leads the cowardly.
I have a feeling we're gonna have a
Jay
fun
Powell is the
podcast
cowardly
today.
lion.
It's Powell. It's Powell first and
It's
foremost.
not even close. The leader gets the blue ribbon for cowardly acts.
Mm-hmm. Mm-hmm.
We're gonna have a fun podcast today.
Always fun
Evans
podcast.
is just a lackey.
Well, and he's lackeying it up this morning. No
He's
doubt
Snoop
about
Dogg's lackey with the cup, just dancing around saying, "Go Jay Powell, go Jay Powell, go Jay Powell." That's all he says.
Yeah. There's not many Fed presidents that will come back out and throw something up against
the
Fed. But...
Can we talk about William Dudley for a second?
Sure.
No, you don't want it. No, I was kidding.
Hey, Matt, I need to go make a 3-course dinner. Can you give me your opinions on Karkashi?
Dude, wait a second. The only thing I'll say about Karkashi is I still have not accepted the fact that he has a role on the central bank, and I want to know the pictures he has of the central bank presidents.
He's my favorite Fed member. Like, not out of respect, just out of sound bites.
Because he's you if you were a Fed president.
He kind of is.
Exactly. Like Mark's personality is Karkashi as a Fed president. Like, it's actually really funny.
Mark's the epitome of it. We'll talk the Fed much more through the week. By the way, while we're transitioning from sectors into commodities real quick, you can take a peek at the dollar.
I think I spoke against the company line though, Tim.
Mm-hmm.
Hashtag no inflation, and there's nothing ever to worry about from an inflationary perspective, and we only have growth in front of us for the rest of our lives.
Oh, we're good, bro. We can run inflation at 3-4%. We used
Inflation's
to be right?
Growth. Yeah, there we go. Now I understand the company line.
Oh my goodness. All right, we'll talk more of the Fed through the week with all these speeches coming up. I'm sure it's going to come up a couple times. Quick peek at the dollar, if you can. UUP contract, the ETF just fading lower. It's been ugly. We downgraded the dollar. It's now going to be testing some major levels of support here through the week. Anything you want to throw in here for the dollar, Matt? Technically.
It's gross.
It's gross, ugly, bearish. Yeah, it's fine. It's, going to test support, not find support. We don't know if it's going to find support or not. Gold now pushing up towards this 1850 zone, falling 200 weekly moving average, or I should say 50 weekly moving average, the daily on the 200 SMA around the same locations here. We're going to be fighting into these zones this week, with that upward mobility and test. What's your read on gold here, Matt?
I don't know how much detail you want me to go into. It's real simple, guys. Gold's beautiful. We love it, but there's a massive battle zone coming on gold. Massive, massive, massive. And we all know the battle, right? It's going to happen. Everybody's lining up, getting ready. We're sharpening our knives, right? We're cleaning our guns, however you want to categorize the gun battle or a fight, OK Corral type level. We know what's happening. We know the zones. We know the players. And we most likely know the outcome. It's just a matter of let it play out, though. And the battle I talk about is the battle between these two moving averages. The one you have here is the daily 200. That is not as important for me as the weekly moving average of the 50. And when you look at the 50 weekly moving average here, you see a scenario where, and again, just assume all of these are zones, right? Because when you're talking about a 50 weekly moving, the 200 daily is going to be right there with it. They're how many days is there? Like probably 40 days difference in the moving averages, I'd say, around, but not a big number when you're talking about exactly where these are. So you're always in the same zone. But when you're looking at that, like for example, look at that bounce, pretty clean bounce. Look at that bounce, pretty clean bounce. Look at that bounce, pretty clean bounce on the weekly chart. Well, that's a lot of choppy nothingness on the daily. So the one I'm interested is obviously the 50 weekly, but we're going to have some concern about the 200 daily there. That battle is going to play out, and it could take some time. It could take a couple of days, could take the week. I would love. You guys know me. What did I say when it came into that battle? Give me a week of consolidation. Line up that breakout. And at any point, Tim, on these downward movements in price, was I like no to gold?
No. As a matter of fact,
no,
you're
even
very
on
clear.
even on this day right here, when it got smoked, what I say, I actually think it's better for gold. Because what did it tell us? It told us the importance of 1800.
Trigger is very
That's what
clear.
it told us.
That's right. Yeah.
And then when it triggered above 1800, what happened? Boom, boom,
off.
right? So no, battles aren't bad. Battles are good. And so I expect a little bit of battle between 1840 and 1855. And while that occurs, coming back to this almighty dollar, number one reserve currency in the world, number one reserve currency in the world, we're going to have some support test. And we're going to have some major support test. And if those major support levels give out, it's kind of like a dam breaking, Tim, right? What happens to all the water when the dam breaks, bro?
It rushes down into the village below and washes everything
Okay,
out.
and what happens to all the fear when something violates major support, Mark? Gets smacked, gets absolutely smoked. And so the battle I'm talking about is the combination of the dollar fighting up against the 50, gold fighting up against the 50 weekly, while the dollar fights the channel at the bottom end of the range. I think it's a good position for gold, guys. I've said this multiple times in the last couple months. I'll say it again. We're beginning something, not ending something.
And battles are good. I love what you said there a minute ago. The battles are definitely healthy and good for technicals.
You can't win a war if you don't have a battle.
That's right. You got to knock them down one at a time. That's right.
How are we going to annihilate everybody who has anything negative to say about gold ever if you don't annihilate them in their pocketbook?
one at a time over time through the every pivot point analysis. Yeah. As soon as, and by the way, the amount of clarity gold could have if we break these levels, it could be impressive. There's still all kinds of chop to the left, but this is really a
There's a
battle here
lot of
that's
chop.
significant.
There's a lot of chop, but there's a lot of chop in this recovery too.
Yeah.
Right.
Yeah.
Give it some time, and all of a sudden, the only thing we're going to be looking at is that.
I agree.
Clear air.
I agree.
I like it. It's going to have a little bit of a choppy week, in my opinion.
I'm looking forward to the choppy week, see how that price develops. It's been a wonderful developing trend over here for a couple of months now as we found those pivot points and started moving higher. Let's lastly take a quick look at Bitcoin and Ethereum. We'll leave crude oil analysis for Mark's commodity corner wrap up here in just a few minutes.
Or we kind of did it.
Kind of a couple. Yeah, we've already kind of talked.
You're gonna here. Let me save you some time because you do this all the time.
Yeah.
We already talked about it.
We hit his ideas. Did we leave anything out?
We covered a good chunk of them.
We talked about energy for 20 minutes.
That's fair enough. Yes. I didn't know if he had something unique and special.
I just
the moment.
I was just like, you do this to like Frank, and you do it a lot. So I just want, like, Mark's sitting back going, what do you want me to talk about?
Oh, listen. I could talk energy for a while. The only thing I'll add on energy, to recap what I think has been a good conversation that we've been having on energy for months now, is from a cash flow perspective, it's great. From a directional perspective, you're a little overextended. So short-term traders looking to hail. I mean, that's been a really powerful run for 2.5 weeks. You are very overextended in a lot of areas. So wait for another setup. Wait for some consolidation. Wait for something. Wait for a pull. Something for short-term trader. For cash flow perspective, I love this. From investing perspective, I love this. But short-term traders can be like, yeah, I love oil. And then if you have a really tight stop on an overextended pattern, I don't want people to lose money on energy in such a great environment.
No, it's you're just a little overextended. And again, like we talked about, the only thing that needs to transpire is, you see that doji right there? Just get that doji on a weekly chart. That's all you need.
Yeah, that's all you need.
Mm-hmm. Yeah, I agree. Consolidation, doji on the weekly, set this thing up, would be a beautiful opportunity moving forward. By the way, let's do talk crypto for 1 minute though. I do want to talk about Ethereum if we can. Bitcoin kind of stuck in the mud, by the way, just kind of in that box over the last couple of months. Until it breaks out of that box, Matt, it's neutral in the short term, right? There's nothing to see there on Bitcoin. Agree?
There's nothing in the box right now.
It's just got to be stuck in there for a while. Ethereum, though, is not stuck in a box, and so many other cryptocurrencies have been running. And I want to highlight Ethereum specifically, pushing towards a $500 billion market cap at this point. And it's had an incredible move just in the last month alone. While Bitcoin stayed stuck in the box, Ethereum has almost doubled, as it broke out of that 2,500 level. We're up at 4,200 right now, even today. It's really an impressive move over the weekend. Sentiment has been building around this product since it's been introduced to the futures market. It's gone up threefold, since the beginning of March here, Matt. What can you speak to just on the strength of Ethereum and what you're seeing here just in that product?
It's got technical momentum overextended. Like, that's it.
Yeah. It's an all-time high. And one of the things I'm scratching my head over here on, guys, as a crypto and Bitcoin and Ethereum guy for the better part of, Matt, 8 years, is Bitcoin going to start to decouple a little bit from some of these other ones? Are they going to play catch up? Can Bitcoin now maybe move into neutrality for a while these other ones trend? They all were moving together, almost lock and step over the last year, and now they're starting to perform at least differently in the last month.
Let me answer. The answer is yes. They've decoupled, and it's been done for a long time. So I guess I don't know what I'm supposed to analyze because it's overextended with momentum. I mean, there's no trade there.
No, I don't think there's any trade in the short term on either of the products. I'm just more curious, and it hasn't answered itself yet. In the short term, they've absolutely.
I disagree. I think it has. I think Ethereum analysis is vastly different than Bitcoin analysis. I think Dogecoin analysis is made up, and everything else has legitimate analysis.
Don't get me started on Dogecoin. We'll talk about that one on the podcast.
You analyze Ethereum differently than you analyze Bitcoin. You just do, and we have for years and years and years and years.
Mm-hmm.
So I've always seen Ethereum and Bitcoin slightly different though.
I think
So,
you and I have. Yeah, I think people within the crypto markets actually have looked at this for the long time. They have, but there for a
but
long
people
time,
within the
everybody just
crypto
kind of lumped
markets
them
also
together.
want Elon Musk to stop talking about the crypto markets.
Get out of here. That's
So
exactly the way I feel about
to me, like I analyze gold and silver differently. I always have, right? They have some commonality to them, certainly, but doesn't every financial instrument have some commonality
Sure.
somewhere,
Yeah.
right? And so, like Ethereum and Bitcoin is silver and gold to me. That's how it is, right? And then you have, the Ripple and whatnot. Ripple before some of the nastiness, obviously, but then you add your palladium and your platinum, and it just makes sense to me that way.
Mhm.
But outside of that, I don't find they're correlated.
They've not been, so it's a good point. They've not been here for a while now, so it's interesting. And just I'm just impressed by the strength of the rally. You and I were talking about this pre-production as well. It's been a
Yeah,
really, really
Ethereum
good
people
run.
who are involved in Ethereum. Again, I don't see any trade here, and I haven't seen any trade here for a while.
Yeah.
Like there's just momentum based,
Mhm.
but like people that are involved in Ethereum don't overreact to this. Just say thank you.
Take
Like
the gift of the
it's
market
great
gods.
price action. There's nothing in the analysis that I'm saying. Like Tim, you asked me a question. Like, well, what do you think I should do, right? Because Ethereum's a major holding for you.
Yeah.
And my analysis was, what? You just tell the team what I told you.
Well, you essentially, and we were talking about this. This is one of the beauties of
Not
having a
essentially say what
community.
I said.
I will say what you said, but I want to
Yeah.
set this up a little bit because I think it highlights the value of having a community, a team. Matt and I started trading together in 2005, and since over the last 16 years, as well throughout our entire life, whenever I need advice, I can go to Matt, and I can get a trusted
And
insight
same for
from
me.
somebody.
Same
Same
to
thing.
Tim. Yeah.
So, and I've held Ethereum now for 7 years, right? And I've taken
Since
some off,
15, I
something
want to say.
like that, around
Yeah.
14, 15,
14,
somewhere around
15,
there.
late 14, early
Mhm.
15, something like that.
And, I'm a long-term believer in the product. I've always actually believed in it more than Bitcoin in many different regards in
Oh,
terms of its functionality, technology. We've had these discussions over the years, Matt.
yeah,
My take on it.
100%. You were always the Ethereum, like the speed of it,
Yeah.
transactions. I mean, just if you want to transfer money, Ethereum was the argument. Bitcoin was actually slow. Yeah. So
And I
again,
essentially asked Matt, should I take some profit? Because this is crazy train, how much this has moved. It's just, it's really incredible perspective when you look at a product that you're holding that's gone double in the last 2 months, right? So I asked Matt very directly, Matt, do you think I should take some profit off the table? And Matt, you are very, very, methodical. We talked about it for a
yeah,
while, and you're like, no.
I'm methodical like a hammer.
That's right. You're
I
like, why would you take profit on something that has incredible momentum and has no sell day?
I said,
So
if you're going to get emotional about it, why don't you take some off the table and give it to charity and make yourself feel better about yourself?
and I said,
Like,
I
what
got
are
a
we
charity.
doing?
I got 3 kids that are a charity. They can absolutely.
Like, as somebody who's not involved in Ethereum and they're celebrating their Ethereum gain, I'm like, what are you like? Give it to charity. Shut up. Take the
It's
gift. What are you talking about?
it's a fantastic problem to have, to sit on profits on something that is running like crazy, right? I mean, there's no question about that. And that's
Listen, it's
kind of where
not
it
just
is.
today though, Tim. If one day just occurs, then yeah, you're going to analyze that one day. This is the continuation of the trend,
Yeah.
continuation of the pattern. This is just so there's nothing really to add because it was overextended last week before the gap on. And again, the gap is due to the futures market being closed. Obviously, crypto trades 24, but it's just the continuation of the same momentum. And so it's bar by bar until a new trend and pattern develop. And right now, nobody ever wants to guess the top the same way you don't want to guess bottoms, trade the momentum. This is a no sell day candle. This is like a positive earnings announcement with nothing but buy. Like,
Mhm.
yeah, it can consolidate, but you're not concerned about. Let me put it like this: it could happen. It's Ethereum. It's very news driven, right?
Mhm.
But if this was a stock, you wouldn't be worried about waking up to that stock going down to 3,000 tomorrow.
No,
So
no. Well, I'm not like these Bitcoin kids. I don't stare at my phone all day long every day. So I had to
no, but
wake
you
up over
stare at
the
Ethereum
weekend.
when it's up 18%.
I didn't realize how much it was up over the weekend. I looked at it, and you and I had a quick
Oh,
conversation, and you
yeah.
got me to chill out just a little bit. Like, okay, Tim, you take the gift,
Yeah, usually
relax,
you have
breathe
to
through
talk
it.
people off the ledge when they're losing.
Yeah, But profits are emotional too, right?
You know,
Profit, they can be.
we really do have a lot of, like, in the last year, we've had so many parabolic moves up.
It makes you paranoid of them.
It makes you paranoid of them, but it's also giving you good practice on how to trade them. So,
I don't know
Yeah.
if I had seen any weakness in this trend, like volume supports it, momentum supports it. Yeah, it's volatile and it could snap back to 35K in nothing. It wouldn't surprise me at all, but that's the instrument you're involved in.
Yeah. Well, and you know me, I'm not too concerned about short-term price volatility. I'm looking at the overall just euphoria around it. It's pretty incredible lately. But you're right. You got to keep the
Like,
emotions out of your decition making and focus on the detail and the data.
like
And
I
then,
had a beautiful analogy, Tim, for you,
Mhm.
specifically for you, that I can't say right now. And it's really eating at my soul that
Save
I
it.
can't say.
Don't forget it. I want to hear it now. Save it.
Podcast.
say it,
I definitely want to
Podcast.
hear it.
say it.
Podcast. No, it's more of it's the podcast. That's a podcast. It'll work on the podcast, Tim.
Yeah. A couple quick corporate items. In fact, we can just kind of rapid fire through them. There's not too many. Live Nation, LYV, got an upgrade to a buy from a hold at Jefferies. They believe that the post-pandemic, everybody's going to go back to a concert basic analysis is what they gave here today. They
Good.
like Live Nation as being able to capitalize that. Simon Property Group, SPG, they actually are buying a retailer, Eddie Bauer. Obviously a lot of these, beaten down retailers that were under distress. SPG is the big mall operator. Oh, quick on live there, Matt. You got something you want to add to that one?
I know. No, I don't.
Yeah.
No.
SPG buying some distressed retailers. Okay, I guess that's within line with what they're going to be doing. They have done it last year as well. They've made a few acquisitions like that. At a couple of earnings reports, Marriott basically came in and beat slightly. The price response to it was kind of muted, and Tyson Foods also did have a slight beat. There's a couple I'm looking forward to this week, though, Matt. Those ones today were kind of nothing burgers, not much to see there. But Disney, I'm looking forward to see what they have to do. There are one or two names on the list there that we're going to be analyzing in a little bit more detail. And this is probably 1A, 1B, and 1C for me. So it's going to be an interesting one when they do report.
Yep.
All right. Very good. Guys, I will say this. If you're a pro member at Tackle Trading, go check out the options report. It's absolutely on fire here this morning. There's so many incredible moves on both the bull team and the bear team. Caterpillar broke out. We saw Best Buy continuing to move its big run. There's about 12 or 15 picks on both the bull team on the stock and the options report. I saw a lot of really, really good momentum in some of the bulls and bears. It's just that stock pickers market we're in, guys. So go and take a look at all of those things. Let's start moving into final thoughts here today on a Monday as we're starting the week out in the markets, getting prepared for the trading week ahead of us. Let's give it to you, Mark, first. What are your final thoughts, sir?
Well, I just give programming tonight. We have the onboarding with Coach Frank, who does his weekly onboarding where he walks new members through Tackle Trading, and we have a lot of product offerings we have at Tackle Trading. And Frank walks those interested that are maybe interested in Tackle Trading or new members, 7 o'clock Eastern here on this YouTube channel. And then Tackle 25 Mastermind Group. Coach Tyler Craig is coaching it tonight. Tackle 25 tonight.
Mm-hmm. Matt, final thoughts from you.
Oh, I'm getting into podcast mode, so definitely check out the podcast.
Matt,
later
you've been
on
in podcast
today.
mode about 40 minutes. Ever since Charles Evans.
It's Charles Evans. I'm in podcast
you're
mode.
in podcast mode.
Listen, you can't drop Charles Evans making dumb comments and not have me get in podcast mode. That's just kind of how it works. No, I'm excited to get into the podcast, talk about the markets and obviously inflation and whatnot. Check out that podcast. Typically, the Trading Justice podcast is released about I want to say 7 Eastern Standard Time every Monday. It's give or take an hour, but it's Monday nights always, and definitely check that out, download it. And if you love the Trading Justice podcast, we do love those 5-star reviews on iTunes, so it works both ways.
Fantastic. Podcast time here for the Justice Brothers. We're going to be going and getting that thing up and running for TJ. We do that each and every Monday. Always looking forward to it. If you're out there and you're watching the show right now and you've not yet done it, subscribe, click the bell. We do the show each and every day. The markets are live 12:30 p.m. Eastern. Halftime crew, you guys were fantastic today. I loved the chat. Keep that up. We'll see everybody tomorrow. Same time, same station. We're out.